So the question for today is, do I have to write a check for a franchise all up front? And the answer is no. So there are lots of different ways to finance a franchise. And ironically, this is one that got me when I bought my first franchise. I had owned businesses before, and I was used to going to the bank and the bank telling me, sure, if you'll give me $100,000, I'll be more than happy to loan it right back to you with an interest payment on the back end. So I didn't even try to go with the banks. But I didn't realize that franchises were different. I also didn't work with a franchise consultant, and I got very, very lucky with the opportunity that was in front of me. But it sure would have been a whole lot easier if I hadn't had to write that check up front and I had known about some of the financing options that were out there. So first of all, the most popular financing option is an SBA loan. Now, what that means is basically the banks will loan you money if you are getting into an SBA certified franchise and it's a government-backed loan. The terms are very favorable. It's pretty much set in stone. You know exactly what kind of credit score you got to have, you know which franchise you've got to get into, you know exactly what they're going to loan to you. If it's under $350,000, you don't need collateral. If it's going to be over $350,000, you do. So these are round numbers. They change all the time. So don't take this as gospel. 3 months from now, they may change it to 150,000 or they may change it back to 500,000. It changes all the time. Just understand round numbers, good principles to live by. So the second most popular option is a ROBS plan. And what that is a rollover from your 401k or retirement fund. And yes, this is perfectly legal and there are no penalties, but you can actually use your retirement funds to fund a business. So beyond that, you can get traditional bank loans or non-traditional bank loans. Traditional bank loans are going to be basically when you go to the bank and you ask them for money, they'll look at a franchise, which is going to be a little bit more stable than looking at a startup, and they're going to take that risk and they're going to assign a number to it. Then, that's what you're going to be looking at. Generally, you're going to be looking at a little bit higher interest rates, a lot more money down payment, those kind of things going on. When you talk a non-traditional loan, it generally means it's going to be a bank, but it's not going to be running through the same guidelines. Maybe they're financed a little bit differently. The interest rates are definitely higher. Sometimes there's zero down payments on it, but there are trade-offs to every one of these options. You can also look at some franchises offer franchise financing, which means the franchisor will finance the franchise for you. So a certain amount down, they'll let you get started. A big reason that franchises do this is it gives you a lot of working capital up front, and you're not stuck worried about a loan when you should be worried about growth. They'd rather you get off the ground and get rolling very early and then be able to pay that note back. You can also have home equity lines. So if you have a lot of equity in your home and you want to pull some money out of your home to be able to finance your business, you can do that. And then the last thing we'll talk about are partner investors. So maybe you have a relative or friend that wants to invest. Maybe you have a relative or friend that wants to come in and put money into your business and be a partner in the business. It works in just about any shape or form, but it's basically a partnership. And sometimes you can have a short-term loan, sometimes you can have a long-term loan, and sometimes you have somebody who's actually involved in the business. So all kinds of different options there, but there are tons of options on how you can finance a franchise. And just remember, the reason the franchising gets financed a whole lot more than startups is because when you've done it 350 times and done it successfully, the 351st is probably going to be just as successful. You typically do need 10 to 20% down payment on the loans. Exception to that is some non-traditional banks will not require down payment, but they do require a significantly higher interest rate on those loans, or they require a higher amount of collateral. When you think about franchising today, funding is a lot more accessible than it ever has been before, and it's a lot more accessible than most people think. So if this added value to you, please like it, give me a follow, and hope that these videos are helping you out. Thank you very much.